Dear friends, in this video, we will talk about how not to run into a scam token and how to choose cryptocurrency for long-term or medium-term investment. You're on the Make Money channel. Let's figure it all out. The dream of any crypto enthusiast is to find a coin that one can enter at the right moment, catch the growth of 10, 100 times, and log the profit at the peak of the value. How to do it? Let's find it out. Working in cryptocurrencies, you have to be aware of the fact that they run not just high risks, and they're much higher than in traditional financial markets. The cryptocurrency can actually fail at any moment, and you will lose all your money invested. Token scam can be initially planned from the very start of the project, or it can come unexpectedly for everyone, like in the case of Luna or FTT coins. When the market wasn't saturated with plenty of coins, it was much easier to increase your financial volume. Those participants who were not scared of the new technology and took a risk to enter the market at the very beginning multiplied their capitals. It was possible that you didn't know anything about cryptocurrencies. You could buy any currency, and with 99% of probability, it would get multiplied. Take GMT, the native token of the Stepan High project, as an example. For the time of listing on the exchange to the peak price, it has grown by almost 52,000%. But the current position of the project is not the best. But is it possible to do it again now? Is it possible for new participants who decided to enter the crypto market only today to multiply their capitals as well? On the one hand, there are new promising projects, technologies, and cryptocurrencies appearing. And if the so-called shit coins or meme coins have no prospects in the long run, the fundamentally strong projects certainly do have prospects. It is unlikely that they will give 10,000% in the near future, but it is quite possible to expect 3x, 5x, 10x. On the other hand, it will not be possible to repeat those results as far back as 2015. The main growth and saturation of the market took place during the so-called bull cycles of 2017, 2019, and 2021. During that time, the total capitalization of the market grew to nearly $3 trillion. In order for active growth to continue further, these technologies need to be adopted, legalized, and integrated into existing financial infrastructures. Many analysts predict that in the near future, instead of legalization, regulation and stricter control will be the negative factors for growth. What do you think about it? Is full control of the cryptocurrency world coming, or will we be able to stay in the shadows? But you should not get upset, because the market will always give you a chance to make money. And so, how to choose a cryptocurrency that can give access? Today, the main task of an investor is to find a project that has good growth potential. Given that the market is in the midst of bear cycle and all assets are being depreciated, this potential must be not just good, but very good. In the bull market, one of the benchmarks for investing is hype. If a coin attracts a lot of attention, then a large number of investors will put money into it, which means there will be strong demand and the price will rise. On a bear market, it is the opposite. It is strictly contraindicated to be guided by hype. If an overheated information background is created around some coin, one should know that at a certain point a major player will sell out the asset when a certain volume of buyers appears. After that, the price will fall. In order to invest in the bear market, you definitely need a strategy. Let's get right down to it. Different projects appear at any stage of the market. It happens regularly, so you need to properly filter the emerging projects, bypassing scam projects and meme coins, and focusing on promising quality tokens. The strategy of project selection belongs to fundamental analysis. It is complex and consists of several stages. The first step is usefulness of the project, the perspective. It is important to assess the usefulness of the project for the community, for the financial system, for infrastructure, etc. What new technology, what new opportunities does the project team create? At this stage, it is important to understand what tasks will be solved as a result of the implementation of this new technology. The second stage is the market potential. The market potential of the analyzed cryptocurrency is of great importance. It is important here to understand the task for which the token's coins are being issued. If it is some kind of meme or a native token for buying or exchanging digital assets in some not well-known online game, it should be understood that the market potential of such cryptocurrency is very limited. Apart from a certain number of teenagers, no one will need such cryptocurrency. Respectively, the probability that this particular cryptocurrency will grow 10 or 100 times is minimal. On the contrary, if the project provides for scalability, the potential of its native cryptocurrency is obviously high. The third stage is tokenomics. Tokenomics are the principles and rules by which value is distributed within a project, the incentive mechanism for ecosystem participants. The key parameter of tokenomics that we are interested in at the project analysis stage is the issuance and distribution of project tokens. Imagine that the launch of a new project is announced with a total token issue of 100 million units. Out of that, 45 million are reserved for the development team. Another 45 million are given to venture capitalists, who fund that project at the start, and another 5 million tokens are sold at various pre-sale stages and distributed through airdrops. Thus, public sale, which is the volume available to all other market participants at the time of listing, will be only 5%. Is it worth buying such an asset, all other conditions being equal? Certainly not. The risks are too big. After all, even before the start of trading, huge volumes of assets are already in hands and they are able to control the price completely. In order for the model under consideration to become interesting for investment, it must have the following properties. Initially high volume planned for the public sale stage. Ideally at least 30–40% of the total issue. Assets reserved for the founders or reserve funds for projects are under smart contracts. That is, certain conditions must be met in order to unlock them and enter the market. The fourth stage is listing on exchanges. If the cryptocurrency you have chosen is traded on 2–3 exchanges and their names are not familiar to you, then you should not pay attention to such a coin. As a rule, the top exchanges do not list explicitly issued coins because their reputation is much more valuable. I told you about where the cryptocurrency is traded in the last video. The tip is in the corner of your screen. The fifth stage is liquidity. The liquidity of an asset on exchanges is an important parameter to analyze. If you see that the trading volumes of a coin are not large, there is almost no one in the depth of market, and the price of the coin moves along the chart with gaps, then it is not worth investing in such a coin. Most likely, you won't be able to sell it later, at least for an adequate price. The sixth stage is venture capitalists. Which stock would you invest in with more confidence? The one that Warren Buffett bought, or the one bought by a private trader you don't know from a Telegram channel? The question is rhetorical, the principle is the same here. Before you make the decision to invest your own money, it is useful to see what funds investors have already invested in the project. This information is available on the official website of the project, but it is not a waste of time to check it on the sites of the funds that the project refers to. The last, no less important stage is the development team. The cryptocurrency community is still young, but it's already quite large. Many developers come from related industries, moving from project to project. You can judge the potential of future projects by their successes in past projects. There are also outsiders, such as those who have been involved in creating scam projects. We blacklist them and avoid them. For example, after the recent events around FTX, Sam Bankman-Fried, Zhixiao Wang, Nishat Singh, and Caroline Ellison should definitely be on the list. In fact, after the failure of FTX and Alameda Research, all the blacklists should double in volume. So, in order to be able to multiply your funds and at least not to lose them, it is necessary to choose assets carefully. A good project capable of generating access in the long run must solve specific and important tasks for the industry, be useful for community development, and have the property of a core technology whose native token can later become a backup in the overall ecosystem. The tokenomics of a good project must be well balanced, so that both investors can earn on the growth of the project, but also the interests of the community were protected from sharp fluctuations in cryptocurrency rates, as a result of splitting funds between investors and founders. Also, a good project has an active development team and serious venture capital funds in investors. Write coins which you have in your portfolio and which you are counting on. I wish you only weekly access in your spot wallet. My friends, that's it for now. Thanks for watching. Do not forget that we also have our Telegram channel, which is in the description below the video. Also, don't forget to subscribe to the channel and of course like this video. Make money.